There are rumors, there are reports that members of Trump's administration have talked about defaulting on, they don't call it defaulting, re-rating the coupon for foreign bondholders. So for people in the administration to seriously be thinking about this, and if you think, well, that's crazy, they can't really do that. Well, how many crazy things have we seen since January 21st? I mean, the US promised the world that the dollar was as good as gold, we'd be backed by gold, and they just tore that up and threw it out the window for, I think, political expediency.
Special coverage of the Deutsche Goldmesse is brought to you by First Majestic Silver Corp, listed on the NYSE and the TSX under the ticker AG. There's no substitute for silver. Hello and welcome to Soar Financially, a channel where we discuss the macro to understand the micro. Here we're on the floor of the Deutsche Goldmesse in Frankfurt, Germany, and I'm joined by Lobo Tiggre, the due diligence guy, the independent speculator. Lobo, thanks so much for coming back to Frankfurt.
Thank you for the invite. I honestly do enjoy this show. I always look forward to it.
No, really appreciate you coming. Much appreciate. Of course, time and effort is always appreciate when you come out. A lot of your followers, subscribers are here at this conference as well.
It's a funny word, follower, isn't it?
I know.
It's like, I don't have followers.
Sounds like a cult.
Yes, right. But yes, so people who like the way we think. Most of my audience is North America based, U.S. Canadian, but a large minority is European, and it's a lot more expensive to go to the U.S. Here you are, Frankfurt. I don't see the same faces here, and that's refreshing. It's fun.
Yeah, I met one of your subscribers. He flew in from the UK yesterday. So
yes, still on this side of the pond, but
I know it's shorter trip. You know, as you said, probably a cost factor as well. Makes a lot of sense. Yep. So, Lobo, we last spoke mid-March. A lot has happened since then. We had Liberation Day. We had another Fed meeting. We didn't get to chat this time around, but we got to go through a few things. Some shocks, macro shocks here in the markets. Summarize it a little bit for us. Like, what was sort of the markets like? What's the economy like the last 6 weeks? Put your spin on it.
Okay, I will, but I have to remind the audience, I'm a due diligence guy, right? I get paid to kick rocks on behalf of my clients. I'm not an economist. Don't even play one on TV.
Yet we always talk macro.
It's because the profession it's the wrong way Corrigans of today's pundits. So you kind of have to, everybody in self-defense has to be an economic thinker. So we'll go there. But I have to put the disclaimer out there because I truly am not a professional economist. I think I probably flunked Econ 101 for arguing with my professors the whole time. Anyway, but Liberation Day, I've also been calling it in parentheses Judgment Day. And we saw, the huge swings in the markets as a response. One has to wonder if, I won't say if Trump knew what he was doing. He clearly knew what he wanted to do. But did he appreciate the impact that his version of will be nice? Remember, our reciprocal tariffs are going to be nice. We pulled out that chart.
I was like, just everybody.
Yeah, that was not what everybody thought nice implied. So massive shock, and talking heads on mainstream media are all, aglow, a joy, a gaga about how, we've come back again. The S&P's back to where it was before. Everything's fine. We've got a truce with the Chinese. It's not so bad. But, it's kind of like one of those things where you're caught in the meat grinder and your hand's already in there and they turn off the motor for a while, a 90-day pause. The pain hasn't actually stopped. And just because the rest of your arm isn't going in at the moment, that doesn't mean everything is fine. We are left with depending on what business you're in, 10%, 30%. I just got a message from a reader who he's an importer of Chinese goods. And I guess because of what they're made of and these things stack up, he's paying 55% more now than before Liberation/Judgment Day. And the Chinese, they're trying to sell their stuff, and they're like, well, we could help with maybe a 3 or 5% discount. He's looking at 55% more now during the de-escalation. Like, he has no choice. How much margin can he eat? Not 50%, right? So that has to be passed on to clients, which is ultimately the answer to your question. Where we're at now is, I think, irrational exuberance in mainstream finance. Everybody's saying, oh, look, the meat grinder's off. It's not so bad. But the economy's hand is still in there. And the price to be paid for what's already been done is just starting to show up in the hard data, right? Just starting. And so even if there's an actual peace, not just a détente, but actual peace, there's a deal. She and Trump get together and everybody lives happily ever after. There's still a price to be paid for what already's been done. And there is no deal. Like a 90-day ceasefire while we talk about things is not a deal. It's not peace. At best, it's an uneasy truce. So what are the odds, dear audience? You have to ask yourself, as you know, if you don't want to be irrationally exuberant, but you want to be a rational speculator in these volatile markets, you know, what are the odds that everything's going to go perfectly? Like, when does anything go perfectly in the real world? So I think there's more pain to come. I think Wall Street is, you know, wildly delusionally optimistic about the outcomes here. Like, even the best case scenario, and I'm in favor of deregulation, lower taxes. I don't have a MAGA hat, but I'm in favor of a lot of what Trump is trying to do, at least his stated objectives. But that doesn't blind me to the prices we have to pay along the way. So what I'm trying to say, you know, blindly delusional Wall Street, I think, is an extreme threat to anybody's financial well-being. Don't drink the Kool-Aid. There is more pain to come, you know, and don't let your MAGA hat blind you to these realities, right? You know, I don't know the future, but to me, this looks absolutely baked in the cake. Sorry, I know you're ready to jump in, but let me say one more thing. I'm not necessarily saying Trump session. You know, that is a possibility. But don't forget the money helicopters. And look at the big, beautiful bill, right? It's got, you know, tax cuts, more tax cuts, you know, no tips, taxes, and all this stuff. It's got lots of spending. And the budget cuts, those are for 4 or 5 years from now. You know, like Congress always does that. And then the cuts never happen, right? So that's inflationary. Don't forget the money helicopters, is what I'm saying. So yes, pain. I think the pain's inevitable, but that doesn't mean it shows up in something the NBER would recognize as a recession, and that has investment implications.
We'll get to the helicopters taking off here in a minute, but I want to come back. Like, just Walmart reported on Thursday, and Dr. McMillan said, well, given the magnitude of the tariffs, we aren't able to absorb all the pressure given the reality of how narrow retail margins are in general for the big box retailers, right? And as you said, the 30%, they're not really priced in yet, and Walmart takes a lot of supply out of China. When do you expect that to show up in the inflation data? Or will it show up in the inflation data?
Well, and of course the Fed likes to pay attention to core data, which excludes such trivialities as food and energy, right? You know, who needs that? Right?
Well, we'll get to energy in a second. That's a different talking point as well.
We will. So, again, not being an economist, I understand from those who are that, like, we're starting to see the little ripples lapping at our toes now. The waves should start coming in next month's data or over the next month. And then, you know, how bad the bigger waves get depend on whether or not we really do step down from the ledge now, whether the olive branch held out to China results in an actual deal at a lower rate. But yeah, so I think it's just beginning, but we're starting to see it. And the interesting thing is, like, the talking heads are all, yay, this is so great. And the administration, of course, is there's no problem. Everything's fine. Everything's going great. But you look at the consumer confidence numbers that we just got, and, you know, the 1 year number is over. It's like almost 7.5% or something. Like, it's such a hockey stick chart. It's unbelievable. And at the same time, consumer sentiment. This is you, Mitch, right? The consumer sentiment, which Powell a year ago was saying was a very important number that they were looking at closely, and now, that's soft data. We don't look at that now that it's not so convenient. You know, that is. I only have a 20-year chart. It's the lowest on that chart, or second lowest on that chart. I have read on mainstream media that is actually the second lowest in history since they started tracking it. So it's interesting that despite the mainstream media, you know, seeming to want to be a cheerleader for the economy and for Wall Street, I guess that's where their sponsors are, and the administration, of course, trying to put the best possible light on the subject, the average Joe and Joanne out there isn't buying it. And this is Republican versus Democrat, right? And by the way, the 5-year inflation expectation number is also, it's not quite the hockey stick of the 1 year, but it's also at a 25-year high, right? Including the GFC, including COVID, right? And, and Powell keeps talking about well anchored at 2%. Like, on what planet? The guy's not telling the truth. Sorry. It's just, his job is to, steer the ship of state, as calmly as he can and so on. Not to be truthful. And I think people should remember that.
If we would have spoken after the Fed conference, it was what is it today, May 17th, last week. It was last week. Then the deal was made over the weekend in Geneva between Bessent or the US and the Chinese. Do you think the Fed would have acted differently at the press conference and at their statement?
No, not at all. And in a way, we didn't miss much by that. You just look at the market reactions, right? Fed has its meeting, and of course they didn't shock anybody. If they had cut or raised, if they had done anything which was contrary to the expectation going into it, was like 99.7% that they would do nothing. So if they did anything, that actually would have applied a destabilizing shock. Their hands aren't exactly tied, but they're very reluctant to do that. So we didn't miss much, really. And where I'm going with this is look at the market action. And this has been a theme in my writing since Liberation Day, Judgment Day, and even before. The Fed is playing second fiddle now. And the Fed's decisions, how much difference is going to make when you're looking at 145% tariffs or 30% tariffs or 10% tariffs, or bans or, extra tariffs if it's steel or aluminum, all this. How much does a 0.25% rate adjustment, how much difference does that make compared to this other stuff? So it's Trump shock that's in the driver's seat right now, not the Fed. And we've seen this actually in the last two Fed days, right? What's been going on with Trump and the transition is much more impactful for the markets than what the Fed does or doesn't do. So now this doesn't mean that monetary policy is done and it won't make any difference ever. But Lynn Alden's fiscal dominance thesis is playing out with an absolute vengeance. Yeah. And it does mean that the market signals that are impacting our investments, we need to primarily look at what the administration is doing, the trade war news, this sort of thing. I kind of hate it because it's so much smoke and mirrors and lightning distractions and so on. But that is what's moving our markets and our commodities prices, and we have to pay attention to it. And until at some point the Fed will matter more again, but we're not there. I mean, when they do start, if we do get the Trump session and they're forced to respond to economic weakness, I think that does matter. If the tariff inflation shows up, as many, including Powell, are guiding, right? It'll be interesting if, they can't just suddenly raise rates. I mean, they could, but I don't think they will. That would administer a shock of the sort they don't want. So I think they will need to start guiding. Even if there's like an emergency pivot, I think you'll start hearing Fed speak start talking about, well, we do have this sudden burst of inflation. It's all Trump's fault. It's not our fault, right? But, we got to do something about this. And I do think we'll have a hint before they do start hiking, if and when that happens. But for now, I think it's, pay attention to what, Li Hui, or however you pronounce that, from China says. And what are the actual deals? What happens here? That's really going to, especially for us as commodities investors and speculators, what happens to copper and aluminum, all these other things. China is absolutely central to that.
Absolutely. No, it makes a lot of sense, and I just used the A word again. I apologize. We were talking about recession percentages, like recession odds. When we spoke in March, I think Jay Powell said 35%, but he dismissed it. And then I've been paying more attention, maybe because I've been paying more attention. The banks came out with their recession forecast. I had Steve Hanke on the program. He was talking about 90%. Druckenmiller is giving 60%. The banks have revised them lower now after the deal with China. Where do
but
you
it's
stand
not a
there?
deal. That's my whole point.
It's like the
right?
announcement with China, right? So
Yeah.
it's, as you said, it's not tangible.
Right. So for them to revise that based on, we can say there's a de-escalation, right? We've stepped back from, totally ludicrous levels. Ludicrous mode in the Tesla, right?
Well, Scott Bessent called it basically an embargo on each side.
Exactly. And somehow Trump seems to have got that message. Like he himself has said, well, there's no point in raising them because nobody's paying them anyway, right? There's no goods moving at that point. But that's when he started talking about maybe 80. And I think that's an important number to think about, because if there is no deal, if the Chinese are like, we're not responsible for your drug problem, like that's not us. And by the way, it's not fentanyl. It's not like they're actually shipping this drug. It's the precursors. They're
chemicals.
Right, which are used in other drugs as well. But anyway, the point is that, the Chinese are not going to want to lose face in this. I cannot see Xi ever embracing any kind of deal that makes the Chinese look bad, or like they caved, or that Trump won and got them to do this stuff. They need to be able to credibly present to their people that they won, that they, the Americans chickened out or whatever. I'm sure both sides will claim victory. I expect that anyway. That's not the point. The point is that whatever the deal is has to, credibly look like that to them. And that's hard to square with Trump's agenda. So if they can't come to terms, maybe we don't go back to 145, hands still in the meat grinder, right? And if it goes, all the way down to 80, that's still almost an embargo, right? But let's say, it goes to 50 or something. Like you might actually, some high margin goods might be able to sustain that and still be cheaper in the U.S. Well, heck, those BYD cars that have a 400 or 500 kilometer range for $10,000, they could slap 100% tariff on those, or 145% tariff. It'd still be cheaper than cheapest Tesla, or a General Motors putt-putt or something like that, right? So there might be some goods that can come in anyway, but not a lot. I mean, really not a lot. I hate to use such an ugly metaphor, but that's the takeaway here. That the meat grinder's turned off, but the hand is still in there, and it's hard to see these sides coming. And sorry, one more side point, but relevant here is maybe the Europeans are more sensible, or maybe they don't care about face. They just want to keep making business, right? So maybe we get better deals with the Europeans. Maybe a lot of these other things go away. He's talking about a deal with India, but I'm not saying that doesn't matter at all, but if everything else goes ideally and there's still an impasse with China, that's huge. That's the world's two biggest economies at loggerheads. And if there's no workable deal there, that is massively disruptive.
How is the current environment reshaping the world order? And it's a big question, but where I'm coming from is I've read articles, or at least headlines, where it says, well, China is moving towards self-sufficiency. We don't need the U.S. We can do all our own thing.
Yes.
Right? So how is that pushing the Chinese? Like another example is the Huawei factories they've built. Within a very short time period, they built 3 chip plants to catch up to the U.S.
Yeah.
And they've done that like this.
Yeah.
In the U.S., it takes years to get anything permitted and get stuff done. My point is, how is that reshaping the world order? I think we're seeing some of that happen.
Yeah, to use your favorite word, absolutely. And I mean it very specifically in this case. Just think about it. Germany has a Tesla gigafactory. That thing's like a shed compared to a BYD mega super whatever factory. I mean, when they build a big factory, it's an entire city. I mean, and I mean that literally. Like, the dormitories, if you will, are, row after row after row of giant apartment buildings for tens of thousands of workers. And this is happening now. This is happening in real time as we speak. So what you said, I don't think this is arm waving or hype, or just clickbait stuff. And I mentioned this in my talk yesterday here at the Deutsche Goldmesse. I think that we're looking at something that is on the order of, and it's interestingly, eerily reminiscent of, echoing of Nixon shock. Trump shock and Nixon shock have a lot in common. One of the things being lots of unintended consequences, one of those being high inflation, which most people who don't have ideological blinders on expect, and I'm in that camp. But so the answer to your question, there have been major changes, and maybe the next biggest one would be the peace dividend, the end of the Cold War, and the peace dividend did make major macro changes around the world. I mean, it unleashed globalization in a way that was constrained when the world was divided into sorry hemispheres of influence. and there was a lot of wealth created by that. That was actually deflationary in a way, a deflationary trend, offsetting the money printing going on at the same time. It raised up the world's poorest, the Chinese included, right? And at the expense of first world manufacturing jobs, sure, but they learned how to code and got IT jobs and did other things with it. So it was, I think, overall, people got hurt. Any change hurt some people somewhere. But overall, I do think that the globalization trend, which really was turbocharged by the peace dividend, was a win-win. Overall, the world is a richer, healthier place than it was before. So that's a major change. And so for me to say, well, this is the biggest thing since the Nixon shock, going way back before that. So, so if you think about the peace dividend, it turbocharged an already existing system or direction. It didn't change the monetary system at its heart or the global economy and its fundamental heart. It just made it more efficient. Competitive advantages. This thing that Trump hates. We don't grow mangoes in the United States. And, they do in Panama or whatever. So we're going to have a trade deficit in mangoes with Panama, no matter what, when it comes to that sort of thing. And unleashing these different competences is a good thing for the global economy. So that was a big deal, but it was an efficiency thing as opposed to a change of order or a change of system fundamentals. And for Trump to try to reindustrialize the United States and put America first, which is not, I think, entirely an economic or even primarily an economic policy. It's partly military, national security, all this stuff. I get that. If you don't make cars, how are you going to make tanks? I understand. But that's not an economic decision, right? That's a national security /military. So this reordering and the impact it has on the dollar, again, reminiscent of Nixon shock, is, I think, more fundamental than the peace dividend, which is why I say that if Trump even succeeds, right, let alone fails is a whole other question, but let's say he succeeds, we're still talking about a fundamental reordering of the global economy, not just the United States. So, yeah, I think this is the biggest thing in 70 years.
About 30% of the U.S. debt is held externally. And
is that all?
That's what I've been
what
told.
They admit to, right?
That's what I've read. A lot of it is held by municipalities. But let's assume 30% is held by sovereign owners like China, Japan, South Korea, holding a lot of Taiwan is holding a lot of U.S. reserves and treasuries as well. But the bond market has reacted very negatively to the tariff shock here. 10-year yield shot up to 4.5%. We're back at that level actually as of today.
Sorry, let me jump in on that because that's really important what you just said. The bond market, it has recovered somewhat, but not really. And for all these cheerleaders on Wall Street is like, oh yeah, Trump shock's over, everything's fine, right? The dollar hasn't recovered.
Nope. Still at 101.
Gold has corrected a bit, but it's still over $3,000 an ounce, right? Yeah. So there are a lot of things that have not gone back to where they were before. So, sorry, I agree. I think the signal from the bond market is material and important to what we're talking about.
No, what I was saying is with the global order is reshaping. Like China, for example, still has $760 billion worth of U.S. treasuries on their book. I spoke with Michael Howell, Cross-Border Capital. He replied to a tweet I asked him, and so what about China? He said, well, they have a sign at the door of the Minister of Finance. It's like $760 billion to go. All right? So they're obviously getting out of treasuries. My point is, how is that weighing on the U.S. economy and anything they're going to do moving forward?
Well, maybe one way, a cynical way of looking at this is it's a win-win for Trump because he's talking strong dollar. If you're patriotic and how great, America number one, America first, make America great again, how can you say you want a weak dollar? That doesn't sound strong and good. But if you look at what they're doing, it seems like everything they're actually doing is a weak dollar policy. And so maybe this helps them. They can, if the Chinese are dumping treasuries, then that weakens the dollar, and that helps the U.S. with its exports or helps on the global competitive stage. It's interesting because they used to have like $1.5 trillion, so they're basically halfway there. And this is part of the de-dollarization trend. I think this is a global mega trend. So for them to continue doing that, I think is actually not really that big a change. If they decided to dump it all at once, that would be clear economic warfare, right? That would be a big deal. And there's an argument that, well, why would they do that? They'd shoot themselves if they did that. Yeah, but if the other guy hurts more, I'm okay. I can
Coming
take
back to the self-sufficiency, like if you're self-sufficient, why would
right.
we care?
And the other thing is, like, I'm not sure how solid this is. There are rumors, there are reports that members of Trump's administration have talked about defaulting on, they don't call it defaulting, re-rating the coupon for foreign bondholders, right? Chinese and the others, right? So yeah, that, X percent, coupon you have on your treasuries, well, that's 0.5x now, right? Just for foreigners. And so for people in the administration to seriously be thinking about this, and if you think, well, that's crazy, they can't really do that. Well, how many crazy things have we seen since January 21st? And B, what did Nixon do? That was completely crazy. I mean, the U.S. promised the world that the dollar was as good as gold, we'd be backed by gold, and they just tore that up and threw it out the window for, I think, political expediency. And sorry, Trump fans, but it's, or sorry, Republicans, but it's kind of interesting to me that Nixon was a Republican. So Trump shock, Nixon shock, Republicans, not Democrats. What's up
Maybe
with
they're
that?
just good at ripping the Band-Aid off.
Maybe, that would be the optimistic. So,
Right.
But what I'm saying, though, is that it would be naive, and the Chinese are anything but naive, to think that, there are limits to how crazy the U.S. can be. History says that's not true. The administration itself is floating ideas that are pretty extreme. So if I'm a foreigner holding this hot potato and they're talking about changing my coupon, tearing it up, well, F that. I'm out of here, right? So, I think these people, I hope they understand they're playing with fire. If they start making serious noises about that, you go from this decades-long orderly de-dollarization trend to a sharp shock, which would be historic in the scary sense of that word.
Lobo, you just told me you're not a bond king in general, but we have to talk a bit about the market action and the money helicopters that you mentioned earlier. A, are they hovering already? What I'm hinting at is here, like Andy Schechtman alerted me to the fact that Soma bought $22 billion worth of treasuries recently. Not sure how out of the norm that is personally, but it's just interesting fact, and I'll pay more attention to it in the future. But when do you see the helicopters really take off?
Well, I got to say, the helicopters never landed. I mean, we've been running trillion-dollar to multi-trillion-dollar deficits in the U.S. since the COVID lockdowns. It never went away. And frankly, this is why I believe I was wrong when I said undeniable recession in the U.S. by the end of last year. People have said, well, Lobo, you're not wrong, you're early. Or Lobo, there was a recession in freight and shipping and manufacturing and all these other things, the rolling recession. But I said undeniable recession in the United States by the end of 24. Didn't happen. I think I underestimated the fiscal dominance. Those money helicopters never landed. We've been spending like, I think it would be a disservice to drunken sailors to say we've been spending like them the way it's been going. We've been spending at literally wartime levels of deficit spending at the same time that the powers that be, Biden before now, and Trump now, they keep telling us we have the greatest economy ever. And yet somehow we're spending like it's World War II. Like, what the F? These things simply don't square. It's just, there's no way these two things can be true at the same time. So I think the money helicopters never landed. Which says that the consequences of the COVID lockdowns and the Fed's record tightening and all that stuff, those were real. They happened. They were papered over, but that doesn't mean that they didn't happen. That meant that, the fiscal largesse kept the wheel spinning and going. But it's interesting that voters sensed it anyway. Like on paper, you paper something over, on paper everything looks fine. The NBER doesn't see the recession. The Fed doesn't see the recession. Nobody, certainly not the Biden administration, nobody sees the recession. But the voters felt it. The reality was still there. Like all the truckers who didn't get jobs, all this, it's still there. So it is interesting how at the end of the day reality matters. And even if voters are being bamboozled and misinformed and misdirected, smoke and mirrors left and right, at the end of the day, if you go into the supermarket and you're like, crap, I can't afford this anymore, or I gotta buy the ramen noodles instead of the spaghetti, right? that stings. People remember that. So I think we're in this place now. I think the money helicopters didn't land. I think the supposedly fiscally conservative Republican Party is, they're raising the debt ceiling for the rest of Trump's term, so he doesn't have to worry about it. I mean, the spending is like now, it's real and it's big. At the same time, we're going to cut taxes, and I love tax cuts. But if there's no pay for it, that's massively deficit spending and inflationary.
Well, even the spending doesn't lead to growth anymore. The U.S. GDP growth is negative, according to official numbers, and nobody's really talking about stagflation.
Right. So like, sorry, but yes, that's exactly what we're saying. Like, if you have everything's okay, you do a bunch of spending, then you get a bump in economic activity. But if what was supposed to happen post-COVID was a big economic trough, and you print all this money, it just sort of fills in the trough. So it looks like, it's not so bad. We're going sideways. Well, it's going sideways because you filled in this giant hole with money. Right. So I'm not sure that. I guess where I'm going with that is I'm not sure that we can conclude that throwing money at the economy will no longer have any stimulative effects. It depends on what the underlying strength or weakness is, whether all that money just fills in a hole or builds a new hill.
What does it do right now?
I think it builds a new hill. I think, the COVID lockdowns are far enough behind us that we have digested most of that. And I think there is enough, even despite all the wackiness, taking Greenland by force, or maybe even Canada and all this stuff. Despite that, the overall agenda, like wackiness aside, the Trump agenda is pro-business. It's pro-growth. And everybody gets that. Even people don't agree with it get that it's likely to create more, you cut taxes, you cut regulations, there's going to be more economic activity. So, to be determined, things would have to be seriously destabilized, I think, to create a new hole in the near term, which could happen, right? But right now, my guess, you're asking me to guess, my guess is that we get that hill. And in practical terms, for us as commodities investors or speculators, what I'm saying is inflation now or inflation later. And later, it's either like some inflation or a lot of inflation. There's some people who talk about all the problems with the economy and they warn about deflation. I just think the printing press is a much more powerful force than anything else. The printing press always wins in the end. And whatever happens in the nearest term, an inflationary outlook, like inflation now or more inflation later, right? That's bullish commodities.
I have one last big topic I want to tackle with you, and that's the impact of oil on all of it. I call it QE for the people, low oil price, because it keeps gas prices low. People can travel, especially in the U.S. They use their pickup trucks to drive 1,000 miles to go somewhere. It doesn't sound really economic, but at $2 a gallon or $2.50 a gallon, it makes sense. And it keeps inflation lower, because oil is used in everything. What do you make of the current oil price and maybe the Saudi travel or the Middle East travel, OPEC overproducing? So what do you make of that whole schematic,
right, okay.
thematic?
So we can make a lot of theories here about what's going on, any one of which might be right. It's hard to say. The one way of looking at this is that the Saudis have just said, screw it, we're going for market share. Forget price. We're going to put these U.S. bastards out of business with their shale oil, and we're going to flood the market until we put them out of business, so we get the market back. That's one explanation for what's going on. Another explanation, and the travel and so on is interesting, is that Trump actually has made some kind of deal here to increase the oil flow to put pressure on Putin. Trump has made a big thing. He promised on the campaign that he could end the war in Ukraine in 24 hours. Nobody really took that seriously. But he really pounded the table on this. This is a big deal. And every time he's on an interview and they ask him about some, unconstitutional or unethical thing he's done, he's like, yeah, but all those thousands of soldiers are dying, and they're not American soldiers, but they're still human beings, and you should see these pictures. Like, the whole shtick, every time. Or the eggs. I just got here. What are you throwing eggs at me for? Right? Every time we need a distraction, it's eggs or Ukraine. Point is, he's, in a way, hung his political hat on this Ukraine thing. So the same time, we've had Russia benefiting from higher oil prices and funding its war machine. So if you really want to get at Putin, you're not going to be able to reason with him, I don't think. But if you want to hit him where it hurts, it's lowering the oil price. And that might affect the Russian war machine.
Can I be like a cheeky follow-up here? Like, isn't there supposed to be a sanction that Russia can't sell oil above $60 anyway?
Well, so if you drop below that level, that no longer applies. But we all know that the Indians were violating it anyway.
That's sort of what I mean. Yeah.
Right. So the sanctions were never that effective.
They didn't work
anyway. Yeah. So yeah, if you're sitting there, and you can't admit that the sanctions don't work. You can't admit that your relationship with Putin and he respects me and I respect him. You can't admit that doesn't work. So what do? Well, the blow below the belt is to lower the oil price, which the Russian economy depends on so heavily, to try to force them to the negotiation table. So maybe that's the 3D chess, if you will.
Can I ask you, though, real quick, just to follow up, like, what's he offering Saudi, though? Like, in return? Like, what is Saudi after? Saudi Arabia, Qatar, what are they after?
Well, he's just announced a series of AI deals for the Middle East. And if you think about it, if China's public enemy number one, we can't let China beat us to AI because they'll take over the world and it will be bad news for the rest of us. Okay, how can you say that and then pivot and set up data centers and all the latest, newest chips, send them to the Middle East? Where does the Middle East send its stuff? To Asia. That's where, the gold souks, they send their gold to the Far East, right? It's so, the idea that we're going to cut China out, but we're going to include the Gulf states. How many of them chant death to America in their parties during the weekends anyway, right? What are these? And I'm not trying to be racist or against anybody here. I'm trying to look at realpolitik here, right? It makes no sense to ban China from getting the latest technology and give it to one of China's biggest trading partners, right? So maybe that's what they got. I'm just guessing.
Yeah.
Who knows? But to the point of the impact of oil, as an Austrian-oriented economist, or not economist, but economic observer, I'd have to say that inflation is a monetary phenomenon, and the price of oil is irrelevant. If the price of oil goes down, something else goes up, right? Inflation is always and everywhere a monetary phenomenon. That said, in terms of consumer prices, and particularly prices at the gas pump, which voters pay so much attention to, obviously this is very important. And if American producers weren't going to drill to an extent that brought oil low enough for Trump to appease voters, and he promised lower inflation, and his thinking, at least from what he said, has been that oil prices were the main way to fight that. So if the U.S. drillers weren't going to do it, offer something to the Saudis to do it. Right? Who knows? Anyone? These are just theories that we can spin. Who knows whichever one of them are true? But I guess maybe the takeaway is never mind what they say, look at what they do, and then try to forecast the impact of that on our investments. The good news for us in our interest in mining stocks is that for all those projects that run on gensets, remote high in the Andes or whatever, that have high fuel costs as inputs, to have lower oil costs at the same time that we have high metals prices, and primarily I'm thinking gold here, but silver is relatively high. Silver bugs will scream at me, say, no, it should be $100 or whatever, but 30s isn't bad in terms of the actual business of mining this stuff, and copper over $4 isn't bad. I think they're all going higher, don't get me wrong, but so you have decent prices to great prices depending on your metal, and you have lower energy costs. Unless you're an absolute cluster F of a miner, you should be delivering higher margins to your shareholders. I mean, that we should be seeing higher margins, and that's exactly what this business needs. I mean, frankly, the business failed so spectacularly and you've talked to Rick Rule and others about this before. This isn't new. We saw this in from 2001 to 2011. A huge windfall in metals prices, and the companies just fell flat on their faces. Nothing for shareholders, like negative free cash flow. And it looks like this time they got the memo. They're doing things, if not right, then at least better. And we're, at least amongst the gold majors, we're seeing better margins. And that's, profoundly good news for all of us as resource speculators.
I was going to say, now somebody needs to send that memo to the investors.
I think it's getting there. I mean, imagine a world, just real quick, imagine a world where, okay, maybe there's no Trump session or whatever, but things are shaky, right? The hand is still in the meat grinder and the pain is still there. Wall Street is trembling. People are looking around for a bright spot. If next quarter, when Q2 results come out and all the gold majors are reporting higher margins and the mid-tiers are, like, we don't have to go back to 3,500 or whatever. I mean, just staying over 3,000 is huge for the gold companies.
Agnico is producing $2,000 in margin at the current level.
Barrick's existing operations were all planned around $1,300 gold. Their current price assumption has crept up, but their existing assets were built assuming 1,300. Right, we're close to 3 times.
Well, Barrick has whole other issues that we can talk about, like branding issues and things.
But the point though is that if we're like just one quarter from now in a world where that pain that I've been talking about has become obvious, and Wall Street is trembling and people are looking around for a bright spot, and if in that world the gold companies are hitting it out of the ballpark, we have real flavor of the day potential here.
I'll give you my thesis for a second. I said that on stage yesterday, and I should have said it because we're at the Deutsche Goldmesse, but I was actually quite negative. Because the S&P 500 is flat for the year. NVIDIA, Palantir are actually green for the year, which is quite pathetic, actually, personally. But my point is that it's still taking the attention away from what we're doing. Investors are used to 20% annual gains in the S&P. They probably won't get that this year, but at least they're not losing money right now.
Well, so the back-to-back 20s was a historical anomaly. For anybody to be used to a historical anomaly is like
but it was too easy. It's like almost risk-free. Let's call it risk-free investing, okay? With a caveat, with the big asterisk, and everybody.
Didn't the Barstool investor tell us that stocks only go up?
Of course, to the moon, diamond hands, and all that stuff. But my point is, there's no need to shift your investment yet again. Like, I was actually quite happy when it crashed because I thought, okay, the 401k money. Yes, it takes time for it to move, but it's starting to think about having to reallocate into other asset classes, which I thought the mining sector might benefit from. Because, as you said, to the point, free cash flow, margins are insane, and yet we're not seeing it. So personally, I'm waiting now for a Fed cut, maybe in September, because we've seen a positive correlation back last September.
But as we've been discussing, if the Fed is second fiddle, are people even going to pay that much attention to the Fed?
I'm
looking
for glimmers of hope here.
Yeah, no, I'm with you on the thesis. I think it is clear that other things have impacted the gold and the broader mining sectors. I mean, in terms of that, I think of it as this liquid pool of capital that chases momentum. And it's very asset agnostic. They don't care whether it's pot stocks or cryptos or gold. Like, they will buy gold if that's the flavor of the day. If that's what's running, then they'll go there, right? So that money clearly chases after whatever's there. And with NVIDIA doing what it did recently, of course that money chased after that. And of course that money wasn't available for even a great discovery or something. And we have had a few. It's interesting. We talk about how long it's been since we've had any really great discoveries in the mining space. There actually have been some in recent years, and I'm not going to name names. I don't do that. But it's actually happening. And so you've got expanding margins. You've got some world-class discoveries being made. Like, the business is actually doing what it's supposed to do. So I hear what you're saying, and if I'm right about the hand still being in the grinder, I think we will get to that point where I don't know that we'll have an actual stock market crash, a la 1929 or 2008 or anything like that. But if you just go from back-to-back outperformance to treading water, by comparison, that's bad. That's a disaster. Treading water is not what these people are here for, right? And it may not even be treading water. It could be losing ground or slowly sinking, for years. We've had this incredible run in equities and risk assets for so long. The only reason why I don't say it's got to go lower is because of the money helicopters. It doesn't got to go lower, but it could greatly underperform. Like we talked about, the effect of the money helicopters depends on whether they're throwing the money on level ground or even a slight rise, or whether they're throwing the money into a giant hole, what the effect is. And I don't know what the answer to that is, but I do see not just a situation someday or whatever, but I think this is something we're talking about in the next quarter or two, where we could see this potential perfect storm. Not a prediction. I'm not saying there will be a perfect storm in 2 quarters, but the stage is set where if they are filling in a hole and the mainstream equities underperform, then our stuff should really outperform. And the fact that it does becomes, a self-fulfilling prophecy or self-encouraging, right? People start piling into what's working. That same momentum chasing cash that has hurt us with its absence could just come piling into our space.
On that bombshell, Lobo, we got to wrap it up here. Really appreciate you coming out, because I like ending on positive notes, and you just said that, so we have to do. Where do we send our audience? Where can they follow your work? IndependentSpeculator.com. The easy ask is always, I've got a free letter. You may or may not agree with all my analysis, but I can promise that I will not spam you with a flood of daily advertisements. I hate that, so check it out. Fantastic. Lobo, thank you so much for coming out. Really appreciate it. Everybody else, thank you so much for tuning in here to Soar Financially from the floor of the Deutsche Goldmesse, the German Gold Show in Frankfurt. Really appreciate it. Hit that like and subscribe button, and we'll be back with lots more. Take care out there.